Hey, welcome everybody to the 40 Finance channel. Today we're going to take a peek at Palantir stock. This is one that just reported their earnings, and there's a lot of hype going on because they actually showed a little boost in their profitability. But we're going to take a balanced view on Palantir stock. This is a stock that I own, currently have about 300 shares, right at $20 cost basis. And if you see on the screen, you're at $8.69 or so today after the run up. So I'm over 50% in the hole on my Palantir stock. So while this recent run up is nice, I still want to take a balanced view in terms of the forecast and the long term for this company, because it's not all roses. If you are a Palantir investor anywhere near the time that I got in and you're running at that $20 or more cost basis. So for this Palantir forecast, we're going to hit on some of the bull cases and the bear cases for this stock here in 2023. All right, so on the bull side of this stock, I think you have to put the CEO right at the top, the guy running the show, and that is Alex Karp. And this is a guy who's very open about what his company does and what they stand for. He works with governments, military, anti-terrorist units, as well as many other sort of humanitarian efforts. But he makes no bones about it. I mean, it's a pro-Western type company, right? And there's a lot of doubters and haters out there when it comes to, using data and intelligence for military operations. There's a lot of folks in the developer community who take stands on such things. And I guess one of the things that I respect a lot about Karp is that he's laser focused on the business, pushing the business forward. You may not like it. However, that's what he is working on. That's what the company stands for. All right, next up on the bull case, flipping back here to Seeking Alpha. By the way, quick shout out, if you like some of the stuff you see here from Seeking Alpha Premium, my affiliate link is in the description. Having a special offer, $99 for a full year, and that includes a 7-day free trial on the front end before your credit card is charged. So definitely check that out if you like some of the stuff that you see here. All right, so you see the headline, and this is where we're getting a lot of hype right now. A lot of bull case hype for Palantir. You had that GAAP EPS of 4 cents, which beat by a penny, and they just eked out beating the revenue estimate by $3.64 million. So, like a lot of growth stocks that have been pummeled here in the past 12 to 15 months, one of the knocks on Palantir is, despite its growth, it's not wildly profitable, right? And this is really the tug of war that we're seeing in the market across the board right now, particularly in the NASDAQ. Growth stocks, the level at which they were growing has slowed. They are still growing. Palantir is still growing, not at the same pace that it was in 2021. And when that happens, you start to look more and more at profitability. Some of the growth stocks, aren't going to pass that test at any level. But in the case of Palantir, you're not really buying it for the EPS right now, unless you want 4 cents of EPS in a quarter. But to show that profitability is within range, right? That they could turn some dials, they could make some adjustments when needed and produce profits. I think that was a reassuring sign for a lot of investors. And that's where the bull case comes in, and this run up that we've seen here of, give or take plus 14% as it stands right now. All right, next on the bull case, at least for me, is this commercial revenue growth. In my opinion, commercial revenue growth represents a much larger opportunity, and it also represents a world, maybe when you're talking about red tape and getting long-term contracts signed, so probably more flexible. Also keep in mind how wide of a net Palantir really casts in terms of the markets that they serve, right? So we've heard a lot about their logistics implementations. We've seen a lot about their tracking and their healthcare. And then, of course, we know about military intelligence as well. There are a lot of private practical uses. Logistics alone is pretty much every company in the world. that I think where the growth will come from Palantir in the future is going to be in commercial plays. Now, the government stuff is great because it's usually a long-term deal. It takes those guys so freaking long to approve anything that usually once you get one, nobody wants to change. They just want to keep going with the existing contract. But commercial revenue growth, I was happy to see exceeded government growth because, in my opinion, the more we can balance those two sides of the business plane, the better it's going to be for Palantir, particularly when we get a year that commercial beats government, which I think is probably an eventuality. And if that happens, I think the use cases broaden in the long term, right? Thinking ahead to 2025 to 2030. And the last point here on the bull side for Palantir, for me, at least one of the reasons that I sleep well at night with this one, is the fact that, and you see it right there, you've got your $2.6 billion in cash and no long-term debt. So while Palantir is a growth company and does not produce, insane profits or insane EPS, there's a lot of flexibility here, particularly if we do have recession or some other environment that pops up where maybe things aren't going as well. Okay, now let's flip over and talk about the bear side of Palantir. And maybe not wildly bearish, but let's talk about, some of the potential risks. Obviously, we know what's going on. United States economy, fears a recession. There's not a whole lot you can do about that one from a risk standpoint. Every stock is at risk in that type of situation. So I think you have to blow by that when you're thinking very specifically of Palantir, because that's a risk that's equal weighted across every stock. That being said, the one thing you do have to worry about is Palantir continuing to exceed projections, right? It doesn't have to be by a lot. We saw the EPS, beat by a penny. But you do have to continue to at least hit analyst estimates, and ideally you're going to beat them at least by 1% or something to keep the positive momentum going. And in that case, there's at least one person, Citi analyst Tyler Radke, reiterated the firm's sell or high risk rating and per share target price of $5. And this Tyler Radke brings up another good point that I haven't seen many people cover. Palantir generated a $44 million benefit to its GAAP net income thanks to the acquisition of its Japanese joint venture. Radke pointed this out. So you beat your EPS line by a penny, but this $44 million, that's, maybe like 8% of all revenue. This quarter came from that. So it's definitely something to watch. It's a good call out and certainly did contribute to the beat on the EPS line and likely the revenue line as well. All right, then we talk about projections. Palantir expects its first quarter sales to be between 503 and 507. Analyst forecasts were at the 520 mark. For all of 2023, Palantir estimates revenue of $2.18 billion to $2.23 billion. That is actually also down from the analyst forecast of $2.29 billion. So again, the stock floated on an EPS beat, but actually the guidance was a little below consensus. So this year they're talking about $2.2 billion, and if we flip over to the consensus revenue estimates on Seeking Alpha, you got $1.91 billion is where they landed in 2022, $2.2 in 2023, so that would be 15% growth. And at 15% growth, forward price of sales is 7.19. So you don't want to see this number come down much more. You certainly want to be plus 15%, I think, with a growth stock like this. Double digits is awesome, but I think the expectations are higher from a revenue standpoint. When we look at the EPS line, you got consensus estimate for 23 of 21 cents. If they hit that, which I think is not in the bag, would be my take, that's a 242% increase if they hit that. That puts your forward PE at 37. Not too bad for a growth stock, but I remember when some of the initial estimates came out for Palantir back in 2021, I had this one pegged on the math back then. I had this one pegged as hitting about $1 in EPS, maybe by 2025. And you see how that world has changed. And it's changed for a ton of stocks. And when we were looking at estimates when everything was great, and now everything's not so great, those have come down significantly. But I don't see $1 of EPS anywhere in here for the next several years. Okay, so bottom line for me, I'm hanging on to my 300 shares of Palantir, and I may even buy more this year as the year goes on to try to lower my cost basis and bridge the gap. I mean, we're at 857 today in a relatively mixed environment in the stock market. It's probably not unheard of to see Palantir make it to that $10 or $12 mark this year. I would be uber surprised if they got back to $20 this year. However, on the bright side of Palantir, I mean, this does have some meme stock tendencies where the good news really lifts it up very, very quickly. So that's one of the bright spots when you're invested in this company. It doesn't take a whole lot of good news to get people flying into the stock. And I'm sure some of that is because the per share price is so low. So from my perspective of Palantir, I'm definitely holding on to my shares. I may add more through the year. The report, the 2022 fiscal year report, hey, it was good. It was good. It was not great. It was not superior, but it does provide a foundation to continue to make improvements. And again, the guy at the top in my book is the type of person who can put his foot down and get a lot of things accomplished in a short amount of time. All right, guys, before you go, don't forget to check out that special $99 offer for Seeking Alpha. My affiliate link is in the description. Hope everybody is doing well. We'll see you on the next video.